Welcome back. In this quick demonstration, we are going to try and solve two things with two different tools. First is to find out the trend bias and potential direction. And the second part is, once we are able to detect that effectively, how can we use a precise entry and stop loss using mathematically correct structures. To demonstrate that, we're going to use two tools which are part of this process. One of the tool we're going to use is called trend change boxes, and the second one is called Ranko trends. So let's add Ranko trends first. You can simply control the ATR you want. We can just going to keep it at 14. I'm using a 10-minute chart. You can use 5-minute chart, 3-minute chart, and based on ATR, this is going to reshape the trend. The second part we are going to consume in this process is the trend change boxes. We are inserting a second thing here. It's called trend change boxes. There's nothing much to add here. We'll just keep it as default. So here we can change the colors as well if you like of each of these items. The idea is pretty clear. If the trend is deemed to be biasing and coiling towards the higher side, which is one way of saying that the trend is bullish, what we have to do is look at these boxes. Now these boxes will show up where the algos are rotating the market. So what do? The trend is up, and we want to enter the trend, and we also need some stop losses. So here at this point, at the end of this bar, the trend is shifted to the long side, and you can see these dotted blue lines which are representing the uptrend bias. So what do we have here? We have boxes coming down and boxes going up. This is the algos getting out, and this is the algos riding and biasing to the long side. Since we are using the time-based bars, these boxes will encapsulate the bar heights. So that's why you see they are of different heights, and they have different approaches to trading them as well. So when the trend is up, I want to have the break of the box. So here the bar is here, I got boxes showing up here and here and here. So this box itself, if I'm smart enough, is an entry in itself. So here I will put a buy stop. Market is going up and down, and I will put a stop at this box. This becomes my zone right there, and you get a 10-point profit. Now the trend is still up. There's no more boxes. Now the boxes are showing up here on the top side, which means if the trend slips on, they're getting out now. Algos are getting out now. Now we see the red colors showing up. Now we see the boxes showing up. Now my job is to take one of the encapsulated box and play with that and use that box other side as a stop loss. So here this box came earlier, this box came, but the trend changed here. After the trend change, I have other boxes showing up here. So if I put a stop loss on the top right here and limit sell here, I get another 10-point profit. So this is how you can combine these two things together. Let's look at today. Early morning, trend was down at this point, and we have the algo boxes. First one came here before the trend changed, so this first one is not really usable unless the second bar market goes inside it. So second box came is the green one at that point. Let me see if I can, right here, right? This is where it turned bearish, bearish, and bearish. This is where the first green box showed up. This is where the magenta box showed up. So I'm not going to chase it. I'm going to let it break it. And the other side of that is, if your stop loss placement is going to be right here, this is the lowest. If you want to play with this one, this green box, this is a little bit higher, so this is my zone. Either I use this zone or I use this zone and give some room to play. Now this is nothing to do with 3 ticks stop loss or what. We are trying to get on the big moves. You can also do with mini micro lots until you perfect your art. You have to trade with real money, and yet again we get 10 points. Professionals do not engage in picking the top and the bottom. We are concerned about taking the slice. We are concerned about taking the slice. 30, 40, 50% of the move. That's all we care about. But with high precision, high confidence, we don't think about it's going to be a loss or a profit. We just keep on shooting the trades. We don't look at the P&L, right? We just go for it because we have a system down, we have a plan, we have a methodology, we have our analysis, which has brought us to this notion of taking a specific direction. How about this one? Market was down. The boxes showed up on the top. We want to go short. We put a short here. Stop loss. This box is your stop loss, and it did hit it. Then we wait for the next one. Whatever stop loss you have, you win 5. Lose 1 to make 5. Lose 1 to make 5. That's the key. Alright, so now the trend is changing again at this point, and then you can see there's a lot of chop going on at this point when algos are collecting contracts and they're going for a kill. And we do every day. Once in a while we take a loss. A daily loss cannot happen. You should be able to win 18 days out of 22 days of trading. You're allowed to lose 1 day a week out of 5, and you have to win 4 days. That's what differentiates professionals versus non-professionals. The trend has shifted on the long side. The boxes are coming after this. This is the first one which came, and then we have another one's wrapping around after this. A couple of boxes showed up here. So what is my job? My job is to find out the least. Now this again, if this is my first box and the break of that is, let's put it, this is the first box. Let me flip it on the other side so you can see it. Alright, this is the box, the first box with the uptrend. market. Now these are wrapping, as you can see, the bars. It is clearly telling us which bar to use, which direction to go for a breakout and catching the trend. Now this trend has shifted to the long side. Next bar, the next bar, the next bar. On this bar we have a box, so we have one more box coming up here, and this is the break. Now if you understand GAN deeply, you have to understand what GAN was studying. Study those materials, what he was studying, not study third hand, fourth hand, fifth hand knowledge, when that knowledge waters down with time, loses context and value, and becomes a different myth and a story. Study the science. This is how the market is shifting, and the dynamics of the markets are shifting, and this is giving us precise stop loss, entry, direction. And if the box height is this, you're taking this as a stop loss, you double it up here and here, you get 3 to 1, 3 to 1. Keep doing this all day long, and this is how we go. When the volatility goes up and down, with the news coming up and down, the boxes are going to get bigger. That means the range is going to expand, which also means your profits will also expand. If you take, so do not think about, oh, this is a 5-point loss, but you're getting 25 profits too. So if you lose one, you still get 15 points profit, right? That's the game. You cannot think about winning every trade. You cannot think about the next outcome. You have to hit your system unchallenged day and night. Once you have a system, and this is just one approach of a specific system based on the laws of nature combined with the trend and algos. So you saw this, you don't know what's going to happen. You took buy here, a stop loss here, it just came very close, but it did not stop you, and off it goes. Now, this was pretty much almost a 10-point stop loss. You got 20 points up, 25 points up, 20 points, 1 to 2, 1 to 3. Now this one, if you're a smart trader, you saw the next one. After this box showed up much smaller. This one showed up much smaller. They are wrapping these bars. So this one bar, second bar, third bar, trend is up. This one became the smallest loss. But now if you have taken this is the news bar, right? So if you've taken this up, stop loss was here. You lost 3-4 points, no issues. But here, there was the biggest and the bottommost part. The algos did not break it. You can see it. But this is how it is. But news are profitable. You have to use other methodologies we teach at level 1. But you got the idea how we can trade this. So second box and third box, they both gave us a loss. The first one did not. And especially when the news is coming, I would like to assume that I'm going to catch the big move. I may have to take initial loss. I hope this helps, and this is how these two tools can be mastered together for a system. While we depart, maybe we can just do one more day just to show the phenomena. This is pretty clear. You can just see the trend is up and up and up, and the idea is to catch the big moves, stay in the trend and catch the big moves. When the trends are shifting, right, algos are shifting, volatility is high, war is going on, you will get chopped. You will hit a bullet or two, you may get some scratches. Not an issue. Trend is up, trend is up, trend is up. This is the bar, right? This is the bar which came in. This is a little late, middle of the night. and you got this long, and this is a stop loss. Stand is still up, still up, still up, still up. So this is a chop zone. Maybe you can go down to 2 minutes or 3 minutes during the Asia session, but here it is, London opens, and where we are on the bias on the long side. So this is again a big bar. Stop loss is here, right? Enter here, boom. So if I take this stop loss understanding, 1, 2, 3, right? Stop loss is this. I'm getting 3 times, but how much I'm getting? I'm getting, just see, 20 points, 10 lots, 20 points, 10 grand. This is how you make 10-20 grand a day. All right, thank you. This is what it was on that day. Volatility shows up at New York always. As you can see, this trend has shifted down here, and this is the first bar on the downtrend. It's pretty big bar. Again, initially keep the stop loss up, but you got your money. How much did you get? 20 points, even though initial stop loss 20. But this is how the trend was initially. When they shifted the trend, they blew up, shifted the trend, boom. But what we do, once they start moving, we're not going to keep the stop loss there. We'll bring it close, right? So what we do, we use these boxes. We can just bring it, trail it here, trail it here, trail it here, let it go. This is where we also have the polarities, which we have in level 1, where we know where the jumps are, where we're exiting as well. If you wanted to wait for the first hour or first bar to finish, this is 10 minutes bar. The next bar came, and the bearish zone is here. This one almost touched it, right? So this is, algos are playing this game. This is algo boxes for a reason. So you exit from here. You can just maybe 1-2 ticks here. You did not get stopped out. And if you did, you had lost 5 points. So isn't it good that you keep the big box and initially stay away, let it play out, and you can do some add-ons. Now the advanced strategies talk about, if you're going with 10 lots, you don't go 10 lots at once. Just get 5 in, or test the waters with 2. Right? Comes against you. These boxes that come to retest this box, right? Anywhere in these boxes, they will come to retest. You can see here they are staying in the boxes. You can say they play the game in the boxes. You can say they came in the box and it went up to the previous box, to the top. So what we can do is, when it comes back to these boxes, inside the boxes, this is too far away, so it came to touch this big huge box. Let's draw it. You should always just draw these, the first boxes, so you know where the context is. Okay, this is one big box. It came down, it came back to touch the inside the first box, isn't it? See here, inside this box, which I have moved it to the left side, it came inside to test it. So you go with 2, come back inside. Now this second box is there, which is also the top of that box and bottom of this box. What is going on here? This overlap is going on. Comes back, I add 2 more. I will add 2 more. So I have 6. I will add 4 more here. So my averages come down somewhere here. And if my idea is wrong, I'll take a stop loss. Then it'll come down this way and it'll go this way. Alright, so if you missed all this, for whatever reason, second time, again the boxes came, the trend was down. The trend was down here. Trend was down here. Right, so these are all the boxes you could have taken. Short here, below these boxes. This is the box 1. This is again the boxes. So when it leaves the box below this, it left at this bar, sorry, the next bar. I hope you can see that, which is right here, and my stop loss is just right there. So I have to initially take this kind of a initial stop loss area. This market is, remember, there are millions of contracts each tick, thousands of contracts each tick, they add up pretty soon. So now there's also the concept of retesting of the boxes. We have also know that. So these are the boxes. I just explained to you, they will go back to retest the box. So it did. So with time, you can see this whole game plays out very effectively, day by day basis. So you got up, you got down, every day you get the same story. So let's pick any other random day, and let's check this day all the way to the back. Let's pick any day. No boxes, no boxes, no boxes. The boxes came here. The trend is down. The boxes showed up here. That means they're breaking the sideways action. Boom. This is the first bar. Below that you go. This is the stop loss. It never came close. 1, 2 ticks above this, and there we go. Boom. Now the trend changed here. The first bar after trend change actually did not show up until this guy. This is the first uptrend change guy, because the color changed. Again, this is, once you have this big move, again you should look at your stop loss and how many doubles of these are you getting. And is there 1, 2, 3, lose 1 to make 3, lose 1. If that is a very big one, if this is a very large one, you make double of it. Ultimately you're heading and slicing 20-30 points a day. You're not picking the ultimate high, ultimate low. You're trading with the pressure zones, and you're slicing the pie right here in the middle. You're not slicing the entire ranges, slicing the pie in the middle. Losses will come as well. If volatility is low, it will happen. End of the day should be profitable. If you have an extremely bad day of extreme chop whole day, because next day news is coming, they're waiting, that is also a possibility. Then what you have to do is just take that day as a loss, and there's nothing to do with emotions. You don't control the market. You just control you. Control it. There you go. Trend is up. Boxes shows up here. Big one. Now this is the same thing. Same logic, right? First bar was a huge. Market just opened. And this is bullish zone. I'm gonna go up, right, somewhere. So this is actually, the market was, even though bullish, it came down hard. And this is where it stopped to the tick on this Renko. What is happening here? These are ATR Renko bars. These are ATR Renko bars. They are not drawn completely. They're just drawing and adjusting automatically by ATR. If you can think about the distance between these two as the virtual bars. And this, as you can see, the volatility changes, so does the height of the ATR Renko bars. They are synthetic Renko bars placed on top. Now this was entire uptrend move, but it started with the smackdown very hard. Market was going up and up. They came smack down very hard to the Renko, to the tick. So what are we looking for? We're looking for the box to break on the top side. It never did. It box completed here when the bar closed. It completed, the box completed. First box completed, which is in a bullish zone. Above here is long, right here on the bigger zone. Stop loss is 1-to-1, but it is still, this is 20 points. Okay, but we got another box inside it. Now this one looks better. So this one outside of that exit is here. and the third one exit is here. So each of them have their own range of stop losses. So this was the best one because trend was up. You got lucky. This is also what we call as engulfing bullish pattern, like a baby inside the womb of a mother. Engulfing pattern, right? Boom, engulfing on a bullish uptrend. These are all basics. You should know that as a trader. There we go. I hope this helped. By putting these two tools together, you are entering into a no fear profitable zone. You can just see it here. See the long trend is short, boxes are coming, trend is long. You may get a stop. This is fine. This is a stop losses here. You got this, got lucky here. Same thing. Here is again, this is short biased. It did not do much. Here long, big bar inside a bar, engulfing pattern. Above this, take off. Engulfing patterns, right? You should know what is the engulfing pattern. You have a big bar and then you have a small bar inside it. It's called engulfing pattern or inside bar. Once this inside bar has its own box, this one has its own box, and the trend is up, right? Rankos are up. Green. I'm not drawing green here, but you got the idea, and there we go. So you got this pattern, and it is there for you to see. Thank you so much.